Hi, my name's Simon Thorpe, and I'd like to talk to you about some propositions for how the Eurozone countries could potentially fix the global economic crisis. The key ideas are, firstly, the cause of the crisis is the money creation process, which currently uses an insane system by which commercial banks are creating roughly 97% of the money supply by just producing money out of thin air, and they then go and loan the money to individuals, companies and governments who then have to pay interest on those loans, and those interest charges are crippling everybody. The solution, I believe, is to replace debt-based money creation by commercial banks with interest-free money creation under the control of central banks and governments. And I would like to argue that the Eurozone would actually be the perfect place to implement this reform, because the Eurozone has enough economic clout to actually be able to do this. And I would argue that once the Eurozone has made that move, other currencies would almost certainly have to follow. So a quick look at the Eurozone economy, where effectively, as I was mentioning, commercial banks create virtually all the money supply. This is Eurozone M3, which is a measure of money supply. And you can see that back in 1980, the total money supply was about 1 trillion, but it's increased to current figures are around 10 trillion at the end of 2011. And this increase was particularly spectacular in a sort of 2-year period around about 2006 to 8, when another 2 trillion euros worth of credit were pumped into the system by the banking system. This is debt that people have to pay interest on. And because that interest on those debts meant that in 2011, the 17 Eurozone countries paid a total of 286 billion euros in interest charges to the banking system. And totaled up since 1995, that makes 4.48 trillion euros, which is more than half of the total government debt, currently standing at 8.21 trillion euros. Massive amounts of money. But that's not all, because there's also interest to pay on consumer and business loans, which have even higher interest charges in many cases. So the question is, does it make sense to allow commercial banks to create the money supply and then charge interest on it? Well, it certainly does. If the answer is yes, if you're a bank or somebody who feeds off the money generated by the banking system. But it certainly doesn't make sense for the population as a whole. It's a disaster. So the alternative, as I say, is to replace debt-based money creation by commercial banks by debt-free money creation by central banks. Well, the big problem is that there are vested interests that are preventing any reform and blocking any serious debate. This is why you don't get to hear about these ideas in the press. Just to illustrate how insane the current system is, let's just see if we can make this interest-bearing debt creation process work. We'll take imagine you're on an island where there's a bank that creates €1 million that it loans out to the population to go about their business and so on. But it's arranged the right to charge 5% interest on those loans. Well, okay, so we got on year one at the beginning, €1 million are created, and the interest charges at the end to pay at the end of the year will be 50,000. So that will take out 50,000 from the circulating money. And this will happen every year for the 20 years until, in fact, there's no money left in the system at all. All the money will have been paid to the bank in interest charges. It's just, obviously, that won't work. When there's no money left, the system will definitely break down. But there is an option for the bank. All they have to do is to pay themselves. The bankers have to pay themselves huge salaries and give their friends lots of money, and they just spend the money back into the economy. This would actually work. You could keep the system running like this. Of course, the bankers would all be going around in Rolls Royces, and they'd have gardeners and chefs and all the rest of it, and the rest of us would have to effectively be slaves to the system. That may look a little bit too obvious. So, in fact, it's a little bit more subtle than that. The banks actually don't just create one lump sum. They're actually pumping more credit into the system every year. And in fact, they put at least enough money to cover the interest charges on the previous year. So here we've got the in the second year we create another 50,000 of credit, which is enough to cover the interest charges from the first year. But of course, at the end of the second year, you have to pay interest charges not only on the million from the first year, but also the 50,000 created on the second year. And if you keep doing that for 20 years, you get interest payments per year now 126,000 euros. And the end result of that is that the total money supply has now been increased by 250%, over 250% over 20 years. And the interest payments to the bank will now total 1.65 million euros, meaning that the bank has actually amassed 65.4% of the entire economy in interest charges. You'll notice also that the amount of people's money, started off at 950,000, it's shrunk down to 873,000. So people are going to be really moaning about this. But the banks have a solution to this. What they can do is to create even more debt every year. So here, rather than just injecting enough to cover the interest charge, you give them a bit more. You lend them some more money to buy houses and flat screen TVs and so on, so that another 72,800 of credit in year two. Keep going like that, and the money supply after 20 years has increased by 330%. And the total interest payments are now nearly 2 million. And the bank is still getting nearly 60% of the entire economy has been taken up in form of interest charges. The only difference is that the people's money is essentially increased a bit. It's now standing at 1,350,000. So people might feel that they're actually getting paid more money. Their salaries have gone up. But of course, these improved wages are being wiped out by inflation, because there's now 3.3 times as much money is chasing all the goods, and so everything will cost more, and so everybody's lost. So the conclusion is this system, where money is created by commercial banks, which are allowed to charge interest, you cannot make it work in the general interest. It just cannot work. In every case, the banks end up with all the riches, and at 5% interest, the banks will control at least 60% of the economy after 20 years, even when the citizens appear to be improving their wages. And of course, after 100 years, the entire system is now controlled by the banks. Now, bear in mind that this sort of system has been going on for centuries already. It's actually physically impossible to ever get out of debt in such a system. And another problem is that the banks get to choose where the money supply goes to. That's why we have house price bubbles and commodity price bubbles, and we have speculation, because the banks don't use it for useful things. They just put the money where they think they can make the maximum profit. So why don't we change the system? Well, I think one of the reasons why it's so difficult to change the system is because you have to think about what the banks are doing with all this interest that they're earning. Remember that in 2011, the Eurozone countries, their governments paid 286 billion in interest charges. And if we took the countries around the whole world, it's over $1 trillion worth of interest charges just on government debt. I'm not talking about consumer debt or business debts. Now, what do the banks do with this money? They can do various things. They can pay their directors and traders enormous salaries and bonuses. They can pay massive fees to other actors in the financial sector. They can move the money to tax havens, or swap the money for other currencies in a system where you can have free trading between different currencies. But in addition to those things, they can buy up the media and the TV companies and the press, and they can prevent journalists reporting on the nature of the system. They lose their jobs if anybody dares to mention that this system is so screwed up. They can buy up professional and academic economists to prevent them revealing the flaws in this system. And they can buy the support of politicians and political parties. Banks finance politicians to not touch the system. So I really think the implication from all that is that citizens will probably have to act for themselves. We can't count on politicians, journalists and economists to give us the right answers. So what sort of alternatives are there? I think we definitely need to abolish money creation by commercial banks. Currently, they're not allowed to create euro notes and coins, but they are allowed to create electronic money in the form of credit. That right has to be withdrawn. The banks would still be allowed to perform all their normal functions, like taking deposits, paying interest on those deposits, lending out the money and charging interest. That's what their job should be. And they would still be able to create money in other currencies, like dollars, pounds, Swiss francs, and so on. And they could actually use those other currencies to buy euros if they want. But we have to stop them creating euros. And we replace the money creation process by the European Central Banks, which would take over the money creation process and its job will be to maintain the value of the euro. That's actually its current job. If there are too few euros in circulation and there's deflation, unemployment and so on, so forth, you'd create more money to stimulate the economy. If there are too many euros in circulation and there's inflation, the economy is overheating, then you could withdraw the excess by, for instance, using an automatically varied financial transaction tax, as I've suggested in a previous video. Important question would be, how could the money be distributed by the ECB? Well, one option, which I think is a very simple one, is just simply to distribute the money between the different countries simply as a function of the population size. So we know the figures for the population, and we could just divide the money up, any money created, pro rata for the number of people. So Germany would get 24%, France 19%, and so on. Each country, I think, could decide where the new money could be spent. They could use it for paying off debt if they wanted to, or building infrastructure, education systems, energy, whatever. You might have European-level cooperation for deciding large-scale projects such as transport, like a France-Spain high-speed train link or whatever. How much money do we think could be generated in this way? Well, we know that the commercial banks have been pumping 600 billion a year into the economy for the last decade or so. So I think we can probably assume that if we remove the right to do that, then you could do at least that. But in fact, I think because of an interesting side effect, the amount of money that could be generated could be a lot bigger. And the reason for that is, if you think about it, in a debt-free money creation economy, there's no need for inflation. We only have to have inflation to pay the extra interest that needs to be paid every year. So if you imagine that you're in a situation where there are banks that are allowed to create dollars and pounds, but not euros, those dollars and pounds will be created with interest to pay, and that will give you a strong inflationary tendency. So imagine that you're a person with $100,000, say for your retirement, and you want to know what to do with it. What should you do? Should you leave the money as dollars, or maybe buy some euros? Well, if you're being logical, you should buy euros because they have increased stability. The dollars are going to devalue because of the dilution effect of all that interest money that has to be pumped into the system every year. So this could really result in increased demand for euros because people will want to buy euros because they're more stable. And that means that the ECB could actually create far more euros to be spent into the economy than you would think. And that would allow the Eurozone economy to expand, allowing a reduction of unemployment, perhaps even elimination of unemployment, increased standard of living for citizens, and so on. So in conclusion, I think the current system of creating money by commercial banks is indefensible. It makes no sense at all, and it makes even less sense if they're allowed to charge interest. A system based on debt-free money creation by central banks definitely can work, and it could be implemented by the 17 Eurozone nations together. And it will provide a huge boost to the Eurozone with no requirement for inflation. And furthermore, I think other currencies might well be obliged to follow once a big currency bloc like the Eurozone had made the change. These sort of ideas are being developed in the UK by the Positive Money Group and in the USA by the American Monetary Institute. So far, I've not managed to find these ideas really being pushed at the level of the Eurozone, but I'm very interested to hear if there are others out there with the similar ideas. If you like the ideas, do have a look at my blog, and in any case, thank you very much for listening.